The following is a conversation with Turner Novak, the founder of Banana Capital and the host of The Peel. If you would like to learn more about him, you can follow him on Twitter at Turner Novak or visit his website, bananacapital.vc. This is the Relentless podcast. So let's start this off with, I remember hearing you first immigrate to the U.S. when you're a really small kid. Parents split up, and your mom starts I think it's a wedding gown shop. Is that right?
Yep.
Tell me about that, and what your mom being an entrepreneur, what impact that had on you.
Yeah, it was actually started before we moved to the U.S. when we lived in Canada. I think she sewed her own wedding gown. That was kind of how it started. She was just kind of always into that sort of thing, like fashion, clothing. She kind of always did some sewing. Like she hand sews. Growing up, there's usually 2 rooms in our house that were just filled with multiple sewing machines, reams of fabric. Like if you go to Joann's Fabric, one of those fabric stores, there's literally rolls of different materials, and we just had those all over the house, and specifically in those 2 rooms. And then she'd have multiple kind of work in process gowns. Like she'd have multiple clients at once, which kind of all over the place. So yeah, that was how it got started. I actually don't know the story, but I believe just she started helping friends make theirs, and then eventually you can start charging money. It's kind of how you bootstrap any business. You kind of fake it till you make it, I guess. So that was, I believe, her original strategy.
Yeah, I've actually noticed that you've said that a few times in a few different interviews where you're like, you don't want it to be fake, but you do want to pretend like you're going to be successful or whatever before you actually end up being successful. Do you want to talk about that a little bit?
Yeah, a good way to think about it is, and it's a good observation, you don't actually fake it. I think more so you just do the job without getting paid or without getting compensated. Like you do whatever you think will be the thing that is working, and that it's a business, you're making money on it, like creative pursuit. You just start doing it whether or not it's actually a thing, and at the same level that you would. That's kind of how I've always done it. But I think that, fake it till you make it is like the soundbite, but you don't actually fake it. Because if you're faking it, it's not real and it's not authentic. So you just assume, you just assume, okay, you're 150 episodes into a podcast. What is the quality like of that 150th podcast? How do you act when you're putting out that 150th episode? Just do it for the very first one. Just start doing it.
Okay. Yeah. Yeah, that's the way I'm thinking about this too. Okay, my next question is, when you were a kid, I was listening to the Danny Miranda podcast, and you said that you were number 2 in the world at Gears of War at one point. How did you get there, and what kind of level of persistence and drive or whatever took to get there? And do you think that translates at all into what you're doing now with Twitter and VC?
I think it does. Yeah. So the way I got there was that game specifically, the ranking was slightly skewed towards how much you played. Like you did have to be good. If you played a lot and you weren't very good, it wouldn't matter. Like if you were within probably the top 100 in the world, if you're maybe the 100th best player in the world and you played the most the most games logged or time spent, you'd probably be ranked number 1 in the world. If you were the 10,000th best person in the world and you played more than anyone else, you might be ranked 100 or 1,000. So I would say I was good. I wasn't the best in the world, but I just played a lot. And there was specifically a week that I had the number 2 ranking. I mean, I just couldn't keep it up because I had school and all that kind of stuff. So I literally could only play 12 hours a day or whatever the number is, sleeping a little bit and then school. And honestly, the thing I'm more proud about in video games was Call of Duty. I don't know how many people like Call of Duty. I prestiged in one day. I don't know if anyone knows how that works, but I got through a full level, a full prestige in a day. It was a double XP day, and we had a snow day. So I just said to my friend, I'm just playing all day. And I don't really remember what happened. I just did it. It basically was just you played literally like 18 hours that day or whatever it was, which was maybe it was embarrassing probably to admit when you're a 16-year-old, but now it's like, yeah, it's kind of.
Do you think that that's converted at all to the way that you use Twitter?
Yeah, maybe. I think you just have to be relentless and just not give up really about a lot of things, because like things aren't going to work. Like I kind of accidentally became an influencer. Like I didn't sign up for Twitter and think I'm going to get 100. Like I don't even know how many followers I have. I think I have 164,000.2 or something. But I didn't show up until like that's the goal. It was just I was trying to get a job in VC, and go ahead.
Yeah, no, I was kind of one of the things that you said is that you started out with like 99% serious and 1% like humorous. Why did you start out that way? What, 0?
0% humorous, yeah.
Okay, why? What made you switch? Like, what did you find or see that was like, okay, no, I need to be doing something different?
Well, initially when I started, it was trying to get a job. So if you're trying to get a job, probably need to be serious. So that was just the initial approach. And it was just like the very first kind of thread I did on Twitter was Snapchat did this big redesign like 6 or 7 years ago at this point. And Kylie Jenner came out and tweeted about how she doesn't use Snapchat anymore. And the stock like tanked. It was just like the beginning of like a 90% drop in the stock price. It was kind of after the IPO. And I don't know, I just always kind of used Snapchat and always thought, it's a pretty good product. I got all the negative sentiment. Like I understood the concerns that investors had. But it had a lot of things I think people just were overlooking and just didn't quite like. I don't think people actually understood the product or what their business model was, the majority of people. And they did this big redesign of the product, and I was like, this was such a good move. Like this is the stocks. This is going to be huge for boosting margins, boosting all the metrics and the numbers that drive the performance of the business. And like no one cared. I think the stock dropped when the redesign was kind of leaked or whatever. So I was like, okay, this is just an interesting place where I was like 95% confident I was going to be right. Like it was one of those things where you don't know for sure. Like you may not have the full story, but I was pretty confident that I was going to be right over the next couple of years. Like I didn't know at the time. Like based on how the world was reacting to it, like I could have been wrong for a while, but I was pretty confident I was going to be right. So I just kind of, it was the very first thing I tweeted on Twitter was I just made this thread kind of like dissecting the redesign from a product perspective and then also from kind of like a Wall Street analyst type perspective on how the product was changing and then also how I thought it would improve like the cash flow basically of the business. That was the very first thing I tweeted. I maybe got like 50 followers from it. Like it wasn't like a lot. I think it got about 100 likes, something like that, which is pretty good when you just kind of start from scratch. I think I had maybe 100 followers on Twitter. It was just like high school friends. And I think what I did was I included the cash tag. So on Twitter, like the stock price, you put a $ in front of the ticker. And then that's kind of like a hashtag. And people don't really use hashtags, but they do use the cash tags kind of. And I think a guy named Alex Heath, he's a reporter who I think at the time was working at Business Insider and then I forget, I think The Information and then he went to The Verge and then The Information. Now he's back at The Verge. Still friends with him, still talk to him. I think he was the first person that actually caught it and shared it. And so yeah, I just met a bunch of people through that. I just kind of tweeted about that same theme for like a couple months and just kind of just sharing my opinion on stuff and then kind of slowly branched out into other categories, like other adjacent things. And then I believe I'd always kind of wanted to get into venture in VC. That was kind of like the long-term goal. And I had seen a couple people doing meme accounts, like making funny content related to it. And it always did so well. And founders loved it. And I also kind of saw the world of like the content marketing that the VCs were doing. And I saw how founders thought about that and how other people thought about that. And I was like, man, there's got to be a way to ingest like humor into this and almost make like a meme account that is tech venture focused. And maybe like at the end of the day, now I think what it is, it's I'm almost like a meme account that monetizes with venture capital, like with like management fees from the fund versus like sponsored influencer post type stuff, which is actually a little bit different now that I have the podcast. We're doing it's just like having people sponsor the episodes. Like it just helps with the cost of producing them and stuff. But so yeah, I just met some of the people around the accounts, gave them ideas, suggestions, and they did so well. So I kind of slowly started doing them myself. And they're just easier. I'm kind of naturally was the class clown growing up, made jokes in the group chat. And it was just so much easier than putting in, spending 10 hours writing this thread versus 10 minutes or 10 seconds writing a tweet that gets 10 to 100 times more, engagement or performance. And I think I had to make sure that I was still doing serious things that were attached to it. So I kind of thought of the humor and the funny stuff was like a top of funnel. Like if you look at all my best tweets over time, millions of views from some joke, and then a serious tweet that gets like 5,000 or 10,000. But like that bottom of the funnel is like the reason that somebody reached out and I ended up investing in their company, they ended up investing in my fund or something. So yeah, the humor is kind of this top of funnel and the serious stuff, which I do it like 1% of the time now. I don't really put out very serious content publicly anymore, aside from the podcast. So the podcast is kind of an attempt to slowly skew back. So that was kind of the thinking on all that.
Yeah, that's actually kind of interesting. Trying to think. I would actually be really curious to hear what your thoughts are. I noticed that in your blog posts, you almost are like very consistently correct on consumer social apps for some reason. Like I don't think I saw a single instance of you being like directionally wrong. So you're mostly directionally correct. Why do you think you have like an ability to evaluate social companies?
I don't know. I don't know the answer, but I would assume it's, a combination of, I try to like look at data, like actual how things are doing versus what the narrative is. And then also try to think about just what I'm seeing in consumer behavior, because I think that factors in, because that will impact the data. Like if suddenly everyone says phones are unhealthy and we're never going to use our phones again, it doesn't matter what Instagram's numbers are. If no one ever uses the product again, it's going to zero because it's zero usage. So you kind of infuse both of those together. And then I think a big thing for why I've been able to be successful as a consumer investor is living outside of any of the major hubs. Like I live in Michigan, and I think about and like surround myself with a lot of the tech, finance, product world and thinking and like the direction the world's moving. But I also just have a lot of just the average America all around me. So I try to stay centered and like stay outside of any bubble. You can go into the bubbles and you can go out of the bubbles. You can move in and out. And I just think it helps me just be a little bit more rational about things. I think it's good to be contrarian. It's good to be contrarian and right, but I think timing is really important too. Like you can be like, there's been people that have been saying AI is going to like take over the world for, decades. And maybe now they're finally right, but you looked crazy saying it in the 90s, right? Or like Web3, maybe crypto is a thing that, it's like infused in our daily lives, but you kind of looked crazy now if you were talking about that a couple of years ago. So I think timing is important on those things. So I think it helps me understand that. I think there's no, like, I don't need to worry about social signaling or anything like that. Cause like, I'm not going to the party tonight with all the co-investors in the company that we invested in together. So I just think it helps me kind of disassociate social signaling with like some of the decisions I made, because that's not how I know those people. Like I met them through Twitter. Like they reached out to me, and we just kind of have a relationship. We hang out, get lunch when I'm in San Francisco or when they're in Ann Arbor. Maybe we've co-invested together, but there's less of like social reasons that I'm doing things. So I just think it helps me make different decisions. So, sometimes they're bad decisions, right? And I think also the tricky part is I had a lot of investors ask me why I was not investing in crypto when it was the thing. And it was the thing for a long time. And it was really hard to to not make any, like I made one very small investment in a friend's company, but other than that, no crypto investing. And it was really difficult. Like it was hard to stick with that.
I know. I heard you talk about like one of the like things that you do before investing in like some app is you like ask your wife. And I did she think did her decision making or thinking on crypto impact your decision to not really pursue it? I also understand that the incentives are kind of fucked, but
Yeah. I think it did. Yeah. I mean, it's always kind of like a gut check. So, I think she's very smart. She's usually, I mean, she realizes these things before I do. So, like anything, consumer behavior. So, when she's paying attention to something, I'll start paying attention to it too. Even if I think it's crazy and don't think she's right, it's kind of one of those things where I've just learned like she's good at this stuff. So if she says something is worth following or paying attention to, I will pay attention to it because I know she's probably going to be right, even if I don't think she is. Maybe we all have people like that where you're like, man, that person's just always, they're so good. Maybe I'm just lucky that my wife is like that. So yeah, that's definitely not just in crypto, but like in everything. Like, and even the investments that I did make, I have invested in 2 companies where she started using it and I reached out to the founder and ended up investing. I believe 2. There might be more. And I just think she is, like I said, usually right. So it's like having a super
like
smart
a really good
analyst
signal
on the team. Yeah. Like, well, yeah, strong signal, but it's like, it's just having like a different, and it's totally different than like one time I did not invest because like every VC told me terrible investment. No one would do that. It was this thing that was targeted almost at middle America versus someone who lives in LA or New York. And that's where all these people were. And they were like, everyone said bad idea. No. And my wife was right. And that was the first time that happened. I was like, okay, I'm never making that mistake again. And like her reasoning and thought process was all good, and it was all sound and solid. So
yeah, it's actually kind of funny that you say that you do that, because I don't know if you've read Peter Lynch's books, but he definitely talks about like he used to walk through the mall and with his like kids and stuff and say, which stores do you guys like and stuff like that.
Yeah.
That's actually kind of interesting.
I think you can learn a lot from, because I think the tricky thing is it's a meme in venture tech communities of platform shifts, and there always has to be a platform shift, and if there will be opportunities. So like we must deploy capital. I mean, I think that was the issue with crypto, was like it became less of an investment in figuring out how to get returns. It was more of a we must deploy what has been raised. And I think that's just prevalent across all of VC. Is like you got $1 billion fund, you need to figure out how to put that money to work, and your business model is if you raise $1, you get 20% of it in fees over 10 years. So if you raise $1 billion, you've just earned $200 million in fees. Well, if you raise another billion, or if you raise $2 billion, more fees, twice as big, it just becomes more of a putting dollars to work, or it becomes a raising money. Like that's the business model. So I just think it impacts just how people make decisions. So I think that's kind of helped me just think a little bit differently and end up avoiding some landmines. I mean, I have made mistakes for sure. I made some dumb investments, but and they're all things that like everyone else is like, that's dumb. Like I would never invest there either. So it's kind of the opposite problem.
Yeah. Okay, on a slightly different note, I've seen you tweet a lot about Temu recently, and I know that you studied Pinduoduo a few years ago. I'd love to hear your thoughts on that and why you think it's interesting.
Yeah, the reason I thought it was interesting was because Temu is owned by Pinduoduo, which is it's the largest e-commerce platform in China, just based on number of active customers. So they're smaller than Alibaba just in terms of like size of revenue and all that stuff, but they have the most customers. So, and they basically went from 0 to a $200 billion market cap from it was like 2015 it was founded to 2020. If anyone's familiar with China, Chinese stocks pulled back significantly from the highs in 2020. And it was also an e-commerce company, which like COVID high. So it had like two things going against it. So it was probably overvalued at 200 billion, and then it got down to like 40 billion maybe was the lowest in terms of valuation. And it's back partially because of Temu. It's back at like maybe 170, 180. I haven't looked at it recently. So anyways, it was just like, okay, I just thought this was an interesting business in China. I was like, 0 to 200 billion in 5 years. Like, I don't think anyone's ever done that before. That's insane. So I just thought it was an interesting business, followed it, was always kind of thinking, man, I wonder if someone could do this in the US or in Indonesia or in Europe, Africa, Latin America, like insert whatever market. It wasn't like a thesis. Like I was trying to deploy capital. Like I didn't have that issue, but I was like, if I meet somebody that's doing it, I'm open to hearing the pitch because I think it could work. Right, like you need to localize it, but maybe like it worked in China, maybe there's an opportunity somewhere else. So, one big takeaway was, Pinduoduo DD or PDD specifically said in all their communication, everything I could find, they're focused on China. They're never going to leave China. So when it was like the end of 2022, I think it was like the fall of 2022. Talked about launching in the US, and I was like, what? It's insane. Like they said they were never going to do this. And maybe that was just Chinese management team speak that I didn't decipher well enough. But I was like, wow, if they're launching in the US, I'm like, this is take it seriously. Like they basically took Wish's model. If you go to wish.com, it's like the worst shopping destination ever. It's like a dollar store on the internet. Terrible business at this point. Like I think they might have delisted. Like they're probably gonna go bankrupt, but they're basically taking that and doing the same thing, but fixing a lot of the issues that they had. So I was like, okay. And I always thought Wish was an interesting concept too, because it was like no one had figured out how to do dollar store on the internet. It's like potentially an opportunity if you can solve it, but there isn't one yet. So yeah, when Temu launched, I was like, man, just like pay attention to this. It's a serious team and there's serious muscle behind it. I think it had like $16 billion on their balance sheet. So if you think about how TikTok spent, I think it was a total like couple $1 billion to blitz scale and scale up in the US. PDD had a similar amount of money if they wanted to use it. So yeah, I just kind of I didn't know if it was going to work. Like it kind of took me, I just was looking into it and trying to understand their model. I wasn't 100% convinced it would work, but I knew that it would be something that would take up a lot of oxygen from things. There'd be a lot of time spent talking about it, and it'd be very visible. And then, yeah, just kind of looked at Pinduoduo's model, figured out maybe what they were going to do in the US. And then, yeah, so that's kind of how I was following it and paying attention to it from the beginning.
Okay. Yeah, it's so I heard you talk about in one of your interviews, you were talking about kind of like trying to apply business models that work in one geography to another geography. And you said something like 30% of your companies are based outside the US. And I'm pretty sure that you're invested in like Joker or something. How do you think about that? How do you think about investing outside of the US and taking, like what you said, one business model from one country that works and applying it to another geography?
Yeah, I think it doesn't automatically work, but I think it just means there could be something there, like could be worth digging into. And usually if like humans are pretty similar across, like we all want to buy things online, get them faster, etc. So kind of the thesis with something like Joker, I just had always thought the grocery delivery was a way to build a wedge to like sit in front of Amazon in an e-commerce purchase behavior. So the thinking was like if you use any of these grocery delivery sites, you probably go to the grocery store a couple times a week. And like it's different if you're single, if you have kids, if you're married, if you're old, younger, whatever, like kind of varies across categories. So it might sound a little bit ridiculous, but we get groceries like 4 or 5 times a week, our family. So it's like a very frequent behavior. And it's also a little bit of a different fulfillment, like the way, like most e-commerce platforms, like if you're building a retailer, a lot of it is like you find like a new use case that no one else has solved, and then you build like the lowest cost supply chain of fulfilling that product or products or experience. So, and no one had really solved groceries online. Instacart did, but there's just like some ways that the model doesn't work because it's a marketplace. It's all third party. Like they don't do their own fulfillment. So they can't do as fast delivery. Also, they don't have like a touch point. If you're ordering something from like a Kroger or a Meijer or a Walgreens, they're not connected to their like ERP system and know exactly what's in inventory. So there's like almost always stockouts. So it just felt like there was an opportunity for someone that was like totally vertically integrated. It's more capital intensive. So 2021 was a good time to like start to raise money for something like that. And if you look at what Amazon's business is, for a while, most of their cash flow came from the cloud business. But I believe at this point, actually, most of the cash flow, the majority of their cash they generate comes from their advertising business, which is basically you sponsored listings and like while you're browsing and buying things, and the brands pay for placement, and like that's probably about half of Amazon's valuation, like their enterprise values, just from their advertising business. I haven't looked lately on like what all their numbers are, like most recent quarter, but I think they're doing like 30 billion in revenue on the advertising business, and it's all kind of, there's some people that do that work on that, but that's an insane like high margin product, and like that's all cash flow. Like that thing probably generates 25 billion in free cash flow for Amazon, which they can invest in more warehouses, better e-commerce experience to then generate even more ad revenue. So that was kind of the thinking. It was like there's probably an opportunity to do something like that, specifically in grocery. There's a lot of offline ad revenue in grocery. So if you go to the grocery store, the way things are placed on the shelf, like people pay basically for placement.
For placement, yeah.
Yep. And like within the store, there's a lot. There's roughly like $100 billion that's spent that's offline. Like literally, you cannot measure it. And if you talk to people in the industry, they're like, half of it works, half it doesn't. We don't know what half works and what doesn't. So like we just kind of do it. And if we didn't do it, we'd be missing out on a lot. So like it's a big market, but like you cannot measure it. And like that's probably that's one of Instacart's big opportunities, like capturing grocery advertising revenue. And then specifically with Joker, what I liked was it was in emerging markets where there's just less e-commerce competition. Like they were initially they launched in 10 different countries, and then now I don't know what's like been publicly communicated, but I think the last that they publicly said is like Latin America is their focus. So that was kind of the thesis. And then I guess the other thing is just the labor costs are a little bit lower there. And like I said, there's less competition on the e-commerce side. And then penetration, like e-commerce penetration and like mobile adoption is kind of inflecting in some of these markets. So just kind of felt like an opportunity.
Yeah, I actually I follow Zomato just as like a passion. I don't own the stock, but it's interesting to me. And it's kind of wild how fast they're growing and how many people they serve. Anyway, yeah, I would actually like to know. So you started, like, I think you've always been interested in investing and business, but I noticed that your like career path up to, even a few years ago didn't. Like my understanding is you were interested in early stage investing, but you did a bunch of decisions like studying accounting at like Grand Rapids. Why did you choose to do that versus anything else? And why did you decide to stay there instead of going to, SF?
Yeah, it's a good question. I grew up on the internet as a kid, so kind of understand the language of the internet, I guess. Played a lot of video games. And I grew up also, just my parents separated when we moved from Canada, Winnipeg, to Grand Rapids, where I grew up. And so my mom like never really had money. I mean, she volunteered at friends' businesses, got paid, gift cards to the grocery store, cash under the table, got food from the church food pantry for a couple different chunks growing up, and also did not get my green card, like official. I was on like a temporary, like a 1-year visa every single year until I went to college. And the only way, because it was expensive to apply for, and I basically had to like tell my dad basically that I need to get into school. Like I need to become a permanent resident. Otherwise, I pay insane out of state tuition. Basically, we couldn't really afford it, and so got my green card, like permanent residency, the year of like my senior year of high school, and then could do like in-state tuition, which I still couldn't really afford. So the idea was stay at home, go to school, which I ended up actually just moving on campus and living on campus. But always just tried to limit student loans, all that kind of stuff. At one semester during school, I worked 3 jobs. So I was working like 40 hours a week total, and then also took 18 credits, which was like the craziest year. I like worked all weekends, worked throughout the week. I had two internships, and then worked a job 12 hours a day, Saturday and Sunday. That was crazy. And I met my girlfriend, not my wife, senior year of college. And so we didn't end up moving. And there's really not that many options when you live in Grand Rapids, Michigan, related to tech stuff. And so worked at a bank lending money to small businesses, because it was the most interesting job. I learned a lot. It was fun, like some aspects of it. And then, yeah, just all the jobs, like I kind of my first internship, or my first job, I worked in a factory of a friend who I went to a video game tournament with. Like we went, if anyone listening knows, Major League Gaming, they were like one of the first, called MLG. They're like one of the first professional video game leagues, basically, which was like, it was so cool as like a high school kid, like watching people play like Halo competitively. And this was in the like mid 2000s. And so, yeah, we went to a tournament together, got absolutely smoked. Like we didn't win a single, it's a double elimination bracket. You play best of 2 in each match. I mean, we didn't win a single like game within any of the matches. We just got absolutely destroyed. I mean, that was when I was like, all right, it was I'd kind of already, I went to college and I was like, I'm going to take life seriously. And then I'm not going to play as many video games, but I met a friend who was like, you're so good at video games. Like, let's play together. And then we got this thing, like, let's go to this tournament. Anyways, we got smoked. So, his mom gave me a job in the factory that she worked in, basically. So
what was the factory making?
They're making shelves for JCPenney and Sears. So RIP. I don't know if either of those still exist, but that was like the big thing we made. We made a couple other like random products, but yeah, work in a factory. It was start at 6 a.m. You got out at 2, which was kind of nice, but still, I mean, you have to wake up like 5 a.m. in the morning, drive and work in a factory. And then you could work overtime on Saturdays. You could come in and make like double pay. So I was making $9 an hour. I think I made, what is that, like $14, $14.50 or something, $13.50. I forget exactly. Or it was double. I think you got double.
Was it double or half, 1.5?
Can't remember. I think it was maybe double. But anyways, so like come in on Saturday, make $100. Like at the time, that was a lot of money for me. And so, yeah, that was my very, very first job. And then I got a job working in the, there's usually those factories are staffed from staffing companies. So like, it's like an outsourced recruiting firm, and it's a factory. I mean, job retention and like is very low. Turnover is very high. So I got a job working at the front desk, hiring people in this, for different factories. So this is the one that staffed our factory, and my job is like help hire people for tons of different factories. So yeah, just kind of every job I got it was sort of like figuring out how to make money. Like I probably could have worked at Jimmy John's or something, or Wendy's, but you get paid minimum wage. Like I started doing these internships. I was making 10, 12, $15. One of them I was making $20 an hour in college. Like it was, I think like my like run rate, like all in annual comp was more than my mom was making at the time. So it was like, that was the option. And then, yeah, I never moved just because of, circumstances. We got married and then we had a kid immediately. So just always kind of hung around Michigan and still here. So now I live in Ann Arbor. So good spot to be.
Yeah, that was actually kind of interesting to me, because your story, when I was listening and like learning about you, your story did not make sense, where you were like, I'm interested in startups, and then it totally makes sense that you couldn't get, you had to pay in-state tuition. You needed to get a green card for like the state that you'd been living in your entire life, right?
Yeah.
And that to me makes a whole lot of sense.
Yeah, and I mean,
Okay.
I don't have a relationship with my dad anymore. I mean, I haven't talked to him in
Same.
5 or 6 years. I don't even know. It was basically when I had kids. And so it was kind of always, I was kind of always working from a, like, I wasn't in a position of strength, if that makes sense, and how I made some of those decisions. And
It was just out of necessity.
yeah, and and I was always really interested in investing. So there were some options in Michigan where I live, but I remember specifically. So I was the president in the investment club in college for 2 years. One of the guys who was a couple years older than me was a previous president. Was pretty good friends with him. He was he was getting a CPA, which is like your accounting license.
Yeah.
If you're not, it's basically like it basically tells the world you're a professional
Public
accountant.
accountant,
You know accounting. So he was getting that, and he had to take some credits to like be qualified for it. So he was in one of my accounting classes my senior year. And I just remember he's like, so this Facebook thing that just went public, like I'm shorting the shit out of it or something like that was the extent of what he said. And I mean, he's like one of the smartest like investors I knew. Like I knew him pretty well. Shorting Facebook after the IPO was actually a pretty good investment for, if people don't remember, it was down like 50%, like the 6 months after it went public. But that is how people thought about tech companies. Like people were like, Netflix, it's a giant bubble. Like look at the financial metrics. Like according to that, this company should be insolvent, or like they're going to go bankrupt. There's like, why is the multiple so high? Why are people valuing this so high? So that was kind of the world around me. Meanwhile, I was like walking past, like I'd leave class and walk down the hall, like the other computer labs, and you can see there's computers where like you can like there's like 8 in a row against the window, and you can see what kids are on. Every single kid is using Facebook in class while the teacher's talking. So like it didn't quite connect with like, okay, it's a bad business, quote unquote, but everyone is using it. Like it's a good product. So it was kind of always like these two worlds that I kind of was living in, and you kind of learn different things about different pieces of both of them. So yeah, and it was definitely, it was really hard.
The narrative and your actual experience were kind of like clashing.
Yeah, and it was hard to make the jump in initially. It was very, very long process.
Yeah, I would actually like to talk about that because I remember you like worked, I believe, in a nonprofit for at least like a few months after college. What was that like?
So I worked at a bank for a year and a half doing credit, basically lend money. It's like debt. And then I worked for the endowment of a nonprofit for about 3.5 years. So we were just the team that managed their endowment portfolio. So if you're familiar with like any of these colleges, you know, they've got very big endowments and they invest them in different asset classes. And it was the best investing like period, you know, even like tech job, really. Like we invested in some VC firms. Like it was literally like the best of like any of those things I could find in Grand Rapids. And it was really interesting. I did learn a ton. Like basically what you do is you just talk to smart investors. You get to hear them, ask them questions. That's also where I got to this realization of they all say the same thing. They all have proprietary deal flow. They're all differentiated. They all have a proprietary process. They all have like they're all top quartile funds and like returns. They all say the same thing. Yeah. And then they're all, you know, they went to Harvard and like all like that common track. So I mean, I learned a lot from that process.
Yeah, I actually kind of noticed you talked about basically having, like, I'm actually kind of curious, how long did it take you? You said it took like roughly 2 years between when you decided you wanted to go into venture and then like actually committing to it, I believe.
Getting a job, like first internship.
Okay. Yeah. And like, I noticed that you were talking about kind of, I mean, I don't know if you describe it as having a chip on your shoulder, but you didn't, you know, you talked about not, you know, coming from like a PM role at Uber or something, or, you know, going to Stanford. How did you think about becoming, like you said that you posted about Snapchat on Twitter and you started writing a blog, but how did you think about breaking in?
The way I thought about it at the time, this is 2017, 18, it was just building like a public track record basically where, you know, I could point back 3 years later and just be like, hey, I was right about this. I mean, that's kind of what you do with investing, except you're not making any money. So that was kind of the process. Creators was not a thing. Like creator economy was not coined yet. I mean, I had no idea what I was doing. Like I was literally just making this up and just getting feedback live and learning how to do all this stuff. I mean, like influencer wasn't even a word, and I didn't want to be. Like I wanted to. My thinking was get a job, have a portfolio company that IPO'd, and like 20 years later I would start my own investment firm. That was kind of my thinking. It just happened faster than I thought it would. So which is great. I mean, there's probably some downsides to that, honestly, but overall I think that was kind of how I approached it. And so what I did was I did this fantasy VC portfolio. If anyone plays fantasy football or fantasy sports, it's like fake sports. You have a fake team. I did that for VC. I just pretend I had $1 million or $10 million, made some fake investments, wrote a fake memo on each one. No idea what I was doing. Looking back, I mean, they sucked. Like they're not very good, but I learned a lot from that process, and then I met a lot of people from that, and then that is how I got some interviews. So I kind of had 5 interviews all at once, just over the course of like couple months.
Yeah, I'm actually really curious. So when you first started doing that, like whether or not they were good, you actually started, and then did you think that people were going to take it seriously when you started doing it, or were you just like, I'm going to, just try this because I've seen it, work with paper trading and stuff like that?
Yeah, I think I was pretty convinced they would work. Well, because I was mostly trying to find new startups, like ones that didn't seem to be super hyped up or like were still semi under the radar, just like so I could have like a unique take. So that's what a lot of people thought was interesting. Like one guy was like, I'd never heard of any of these companies before. Like, who even cares if it works? It's just like you are bringing different ideas to the table, and that's part of what investing is just like unsourcing new ideas and new themes. Whether you're like public market or private market, it's just like you're bringing a different view to the table. And so like some people valued that. And yeah, so it was, like I said, it was a very, very long process that like,
yeah, years of just like pounding it out and just like trying.
Yeah. And it wasn't really like a measured thing. Like it was kind of fun. Like it really was fun to just like share my thoughts. And so I never really got too impatient. Like it was kind of enjoying the ride, but there were times where, it was just a lot of work and just like hours put in. So there were times where it was like, is this ever going to go anywhere? And it was always kind of like a part-time fun thing. Like it wasn't my full-time thing. So like I kind of sit and wait, but it was also like, there's got to be like some goal to all this, which it was basically just get a job. That's what it was.
How many cold emails and like cold reach out did you do before you ended up actually you said you became like a partner at Geld, right?
It wasn't actually a lot. So I don't do a lot of cold outbound for anything, like even today. But I think my cold, like I don't know the number, but my cold outbound response rate is like 80% or something. Like it's like an insanely high number, but I don't really do cold.
But they're all
cold.
like
It's all
thoughtful.
Yeah, well, and it's like just like people that follow me on Twitter. So like they've already opted in to see me. So I don't really do a lot of cold, and I think that's really the strategy that I take for banana investing. It's like it's all warm. Like if it's not warm, then I haven't done a good job of like getting in front of someone. So like sometimes I'll cold email someone, like it is a cold email. They don't follow me or anything, and they'll be like, "Oh, I've seen your TikTok. Or like I love your TikToks, they're so funny," or "I listened to your podcast." I'm like, amazing. So like I don't have to sell myself. So you get a lot of inbound, but then also your outbound is just, it's like warm outbound or hot outbound. Like they'll be like, I was going to reach out to you. So like that, sometimes that's a response. So yeah, I think I just, you basically make your cold outbound as warm as possible. actually like you don't do cold outbound because it's all warm, which maybe that's a bad strategy, but I think it's a little bit different than how a lot of people do it.
Yeah, I was actually kind of wondering. I have really not used TikTok. I've actually actively tried to stay off of TikTok. I don't want to get addicted to it. But I downloaded it and watched a bunch of your TikToks because I was like, okay, I don't know exactly why he's doing this, but I spent like 30 minutes just scrolling through your TikToks, and it was kind of funny. Like a few of them, I was really laughing. What the hell is like the marketing behind? What is the idea behind that? Because you're getting like 500,000 views or something on some of them. I think like at least 50,000. At least.
Yeah, I think so. They're not serious. I don't think I have a single serious video on my TikTok. I might have one, but it started one of my friends. So we've probably all seen these like really embarrassing like influencer videos about like day trading or analyzing stocks, and they're just really bad. Like objectively, it's like you probably shouldn't put that on the internet. And it was like I think a joke. One of my friends, his name's Nick Echkarian, I think is how you say his last name. He was like, when are you gonna do one? When are you making a parody video? Because I was like, my tweets were kind of funny. He's like, when are you making a parody video of like the stock influencers? So I did one analyzing. I think I analyzed Spotify's earnings or something, or no, it was Shopify's earnings, I think, and it was just really bad. Like I just said things that were really, really. You could tell I didn't know what I was talking about, and I think I was like holding my baby at the time too. It was objectively like a terrible video, but it was like a parody of people that will like break down stock. Like it's bad.
Yeah. You're making fun of them. Yeah.
Yeah. Well, I was never. That's the thing is I don't really make fun of ever like an individual person. Maybe I've done that one time, but I just don't think that's. I try not to. Like instead it's like a class. I usually do like a entire class of people or like an idea or a concept, and I usually try to make fun of myself, and like I never try to like single anyone out because it's really hard to create content on the internet. It's really hard to be a founder, start a company. So like if you are putting yourself out there, I will support it or not comment, right? So yeah, I think Toby, the founder of Shopify, replied to the video and I posted it on Twitter, which is awesome because yeah, he follows me on Twitter. So like, and that was the kind of people that were following me on Twitter too. Just people that have founded companies, publicly traded companies, following my thoughts. A lot of them they still follow me, and like honestly, like some of them like they'll DM me and be like, "Hey, are you like a real person, or are you like a meme account?" So it's fun. But yeah, that's how it got started, and then I just every once in a while, like I always use TikTok because it was the day that Musical.ly rebranded as TikTok. I remember seeing it and was like, "That's
like what's
stupid.
Up with this?"
Yeah,
right?
but I mean, your initial thinking is like, "Who cares?" Right? Like that's probably what everyone thought. And I started using it. And I was like, "Holy cow, this is like the best product I've ever used." And that was actually one of the things I tweeted about back in 2018 a lot. Was just I had this really long thread going for like 2 years, just posting a lot of news about it because it just like felt like one of those things that was a really, really good product. I just kind of felt like with SoftBank had invested a couple months prior and they had like $3 billion that they'd raised. And I was like, they're going to make this work. Like they're going to force it. And the company that owned it basically had a similar product to like the Facebook news feed in China, which is a very high margin product. And I was like, they're going to make this thing work in the US. So, that was another example of things I tweeted about quite a bit. I kind of use TikTok, like not a lot. I usually just try to like pay attention to what's going on and like just make sure I understand how the product's changing. And sometimes it's good for consumer trends. Like I'll search things and look them up and see what the youth are saying. So,
do you think at all about how like a new company can scale really quickly? Like I'm super fascinated by like Mr. Beast and even like what is it, Prime or whatever that Logan Paul and KSI are doing. But they have been able to scale businesses insanely fast. I think they're both doing like more than probably $1 billion in revenue annually. I don't know if Mr. Beast is yet, but he will be next year, How do you think about that?
Yeah, I think they're just the new brands. It's like they, if you just take like they're the new celebrities, but they're very like in tuned to. They have like a direct connection to the audience. And if you think about like how did we do marketing? Like specifically think about like marketing to kids. So Kellogg's cereal is maybe an interesting comp to Mr. Beast Feastable product. Like it's a chocolate bar, but whatever. It's selling food to kids. Kellogg's used to have these characters like Tony the Tiger, Frosted Flakes, Toucan Sam, Fruit Loops. I don't even know any other Kellogg cereal, but they're characters, and they were in these commercials. Lucky Charms, the leprechaun, and be a rainbow. They had these stories that they would tell, and like that's how they'd sell the product. And these are just like Mr. Beast. He's a character. He's introduced characters into his shows or into his content. Like I think they did this one where they were all trapped on like a floating boat in the middle of the island. Yeah. Mm-hmm. And like he had, I think 4 friends or 3 friends that joined him, and those are recurring characters. And eventually they're all going to launch products. Like that's kind of like the playbook for this. And it's basically just like attention. Like you understand how the algorithm works. Pretty soon, I mean, and the algorithm just waits, and the platforms wait towards however they make money. That's the kind of content that they'll push. So you just have to figure out. That was part of my thinking with TikTok, was like understand short form video, because it's the direction they're all gonna tilt this way. So if you're out there writing threads and shooting out text, but the platforms don't want people consuming that, it doesn't matter. No one's gonna read it. You need to figure out what they're gonna be waiting, and you need to take advantage of the low hanging fruit. So yeah, I think and I think younger generations too, they don't really identify with like, Procter and Gamble launching a new product. Like they don't even know what that word means. Like it's the company that owns all these brands, but they identify more with like an individual and like a person. And that's, I think, kind of there may be like holding companies. There'll probably be people behind these, like teams behind them. And then I think you can do like influencer marketing. I mean, influencer marketing, we've been doing it for generations. We just haven't called it that. It hasn't always been on the internet, but that's kind of people buy from other people. And we're just going to get into like making that more efficient, more programmatic. I mean, it's hard to scale an influencer marketing campaign. But that's essentially what this is. Like, but instead of giving up all the margin, because in order to sponsor an influencer, you need to make money doing it after you pay them. It still needs to be profitable. The influencer just takes that margin for themselves and launches their own product. So that's essentially what's happening.
Okay. Final question. What is the most difficult experience you've ever had to overcome?
The most difficult experience I've ever had to overcome. It was pretty hard to close Banana Fund 2 in May of 2022. That was an interesting time. It was just, if you can imagine, if you're dialed into tech startups, investing, it was a hard time to raise money.
Just completely closed.
Yeah. So, and yeah, I just so many horror stories from a lot of people. It was just a hard time to do any fundraising.
Okay. Well, Turner, thank you so much for coming on and being the first guest.
Yeah, thank you. This is awesome. Thanks for having me.